Every bookkeeper has that one client. You open QuickBooks, click the bank feed, and it says transactions to review 100 plus. I have a client exactly like this. They only pay me $250 per month. But the weird thing is they don't have a small number of transactions. Every time I opened their books, there were like 100 plus transactions waiting. Coffee shops, Amazon purchases, deposits, random software subscriptions. And no matter how fast I worked, I could never catch up. Every time I cleared the feed, next week, another 100. It felt like trying to empty a bathtub while the faucet is still running. But now, when I log into that same client's books, there are usually two transactions left, and the entire month takes about an hour, which means that $250 monthly client effectively pays me $250 per hour. And the reason isn't fewer transactions. The reason is rules, a lot of them. Most bookkeepers try to solve workload like this: work faster, work longer, get better at categorizing. But categorizing transactions faster is like getting really good at digging a hole faster. You're still digging the hole. The real goal is to make the hole disappear. And this is where QuickBooks rules becomes ridiculously powerful, because most financial activity follows patterns. Subscriptions repeat, vendors repeat, deposits repeat. And once a pattern repeats enough times, and especially if the pattern is the same every time, the process can be automated. But here's the thing nobody tells you. Most bookkeepers have maybe 5 rules, maybe 10. I decided to push it way further. With this client, I started noticing the same patterns showing up consistently. Same coffee shop, same software tools, same payment processors. So instead of categorizing them again and again and again, I started building rules. Rule number 1, vendor contains Starbucks meals. Rule number 2, vendor contains Google Ads advertising. Rule number 3, Stripe payout, sales income. And every time I saw a transaction repeat a few times, I built another rule. 5 rules turned into 10. 10 turned into 20. Eventually, I had over 50 rules for this client. And now what happens is simple. Transactions hit the bank feed, QuickBooks checks the rules list, and most of them get categorized instantly. By the time I log in, almost everything is already done. So instead of reviewing 100 transactions, I'm reviewing 2. And here's where it gets interesting. Rules don't just work for vendors. They can work for any pattern. For example, this client writes the same check twice per month, same amount, roughly the same timing. So I created a rule based on date and exact amount. Now when the check hits the bank feed, QuickBooks categorizes it automatically. I still glance at it because you should always sanity check things, but it's basically pre-solved. Another example, there are certain transactions that will never be automated, like a $100 ATM withdrawal. QuickBooks can't guess what that was for. There's no AI crystal ball that knows if that was office supplies, owner's draw, lunch money. So those still need human review. But when everything else is already categorized, those few transactions are nothing. That's how the entire month's books take about 1 hour. Now, let me say something important. Don't be reckless with rules. Bad automation just creates automated mistakes. So here's how to do this safely. First, clean up your chart of accounts. Automation only works if your categories are consistent. If you have 5 versions of advertising, rules will just spread the chaos faster. Second, build specific rules. Avoid broad things like deposit sales. That's a guaranteed future headache. Instead, Use multiple conditions, vendor name, amount ranges, keywords. Third, put specific rules above general rules. Rules run top to bottom. First match wins. Example, Amazon Web Services, software. Amazon, office supplies. If those are reversed, everything becomes office supplies. And finally, don't auto-add everything. Some rules should just pre-fill the category so you can quickly review them. Automation should reduce work, not eliminate oversight. The big takeaway, the reason that $250 client became a $250 per hour client isn't because I worked faster. It's because I stopped doing work that a system could do for me. 50 well-built rules turned a chaotic bank feed into something that almost runs itself, which means when I open the books, there aren't 100 transactions waiting anymore. There are 2. And once you start building systems like this across multiple clients, that's when bookkeeping stops feeling like data entry and starts feeling like you built a machine that runs the business behind the scenes.